Hey, what's going on, everyone? I am back. I don't know if you were watching my previous broadcast where I was playing the Robert Kiyosaki's Cash Flow game. Something that I usually do a broadcast on Fridays, but I wasn't able to do it on Friday, so I did it on Monday instead. Today, we're actually opening up the week with a new, um, like a different kind of platform. You'll notice that I can now do stuff like you're seeing like this, and you can see that I'm getting alerts now and everything because as per the title of today's video, I am officially stepping up my trading game by upgrading to a paid version of TradingView. Now, it comes with a lot of different bells and whistles, a lot of which that I don't really know how to use just yet. And it comes with an increased amount of alerts and alerts on indicators. Don't really know how to use all that stuff yet, to be quite honest with you. But I am committed to learning, and right away I can already see the benefits of doing this because I'm getting alerted to like what trades I'm able to keep tabs on a lot more stuff than I did ever before. Because before I would have to have this one watch list, and I'd have to. Uh, it was a good discipline. Not gonna lie, it was good practice to come in, every hour or every other hour and just kind of just go like, okay, what's happening, like kind of like that. Whereas now I'm able to actually cast a much wider net and just get alerted, just like this right now. This little alert has just been kind of annoying me because I set it up wrong. It keeps popping up. Um, but this is on the this is actually on the treasury bond. This is actually a trade that I wanted to take here, and since it alerted me on this, let's take a look at it, because this is a zone that I was given to. It comes from a paid source, right? And this zone is enormous. 12 points on this zone right here. Let me just show you right now. If I were to take this, it's for a $400 risk. Crazy. That's way outside what my account can handle. So I was very, very wary about this, but I did understand. I did recognize that it entered the zone, and I was like, all right, it's all the way up here. I don't know. Like, I definitely want some. I want a piece of it, heading down, and then I will. I'm gonna move this over in a second. I want a piece of it heading down, and I was because of this alert system. I was there, and I could have taken. I was ready to take this market order, but I actually didn't because I didn't have enough margin. This is a really, really expensive contract. This is the T bond, right? Treasury bonds, and it's just really, really expensive, very expensive security to trade. So I wanted part of it, but I couldn't. And so I guess I could have done the thing where like I just cleared the deck and then get rid of everything else that I have. And I don't even know what the initial margin on this is, to be quite honest with you. But I the important point is that I was ready and able, and I was alerted to it. And I was there. I was actually present. I actually at the moment I remember seeing this on my phone, and I was like, you know what, I'm ready to take it, and it's doing this again. So yeah, the point is I am gonna incorporate a more sophisticated level of alerting. Border, like right now it's just way overkill and it's annoying, so I'm gonna take a look at this. Oh yeah, so it's gonna alert me once per minute, right? So I wanted to see how that worked. It works exactly as annoying as I expected it to be, and it keeps showing me that there was bearish divergence on the. Okay, let me just get rid of this only once. Okay, so it shouldn't do that anymore, and it didn't show me divergence on the 1 hour. So I still have a lot. So what I've actually taken on is an increased learning curve of what I can handle, right? Or rather, an increased learning curve of I have to master a new set of tools in order to be able to get to the what? In order to be able to get where I want. See, you're witnessing me being very annoyed by this right now, and not handling this very well, because I want the divergence to show if there is regular bearish divergence on the 1 hour once. I don't know. I hope that doesn't show up again. I feel like it shouldn't have. It should have fulfilled its once, and it shouldn't pop up anymore. I think. But you can see how I have a lot more alerts available to me now, and I'm just testing them out and playing with it. I have a lot of different kinds of watch lists. I can have different color watch lists now. This being part of it. So I have an alert for price. So when this crosses, near my level that I want to take, then it's going to alert me, and I'm going to be ready to pull the trigger on it. This is something that I've wanted for a while, but I've been hesitant to actually sign up because this is a paid service. This is something in TradingView, our TradeStation, which is the platform of the broker that I use. I should be able to do all this stuff natively, but it's a very esoteric kind of platform, and it's very wonky. And the major problem that I have with it is that it's not web based, which means I have to be in front of my computer. Not a really big deal right now because I'm near my computer all the time. I have a laptop now. I'm near my computer all the time. It travels with me. Okay, this is really starting to get annoying. I'm just going to cancel this altogether because I'm just going to delete this. I can't enter that trade anyway because it's too expensive for my blood, and it's already entered and left the zone. I'll pick it up on the next trade. Whatever. As I was saying, I actually am... I've been hesitant on signing up for something that is paid. And now I think I'd have to just get over it and pay for it, because there's actually a lot of things in TradingView. There's arguably too much. There's a lot of stuff that they're offering is something that I wasn't really interested in paying for, but if I'm gonna do spread trading, I need to be able to chart it on TradingView. It's just the most familiar to me, and it's also gonna be at the highest level. And I don't know that I'm gonna buy it at the highest level, but the most expensive subscription is $600 a year, and that's something that I should be able to make back in a month. So it should pay for itself very, very quickly. So there's really no reason for me to be penny pinching and not incorporating the bigger tools, the bigger bells and whistles, like the alerting. The alerting alone makes it worth it, because if I just pick up one trade that I would have otherwise missed because I didn't have the alerting in place, then it pays for itself within one trade. And there's plenty of trades that could go up to $600. A lot of mine have not gone up to $600, but there's plenty of trades that have that potential, provided that I don't really mess with the profits. So this is I'm looking at this as a revamp and upgrade to my trading game, but the upgrade comes with an increased learning curve. So I might stumble and fumble a little bit for the rest of the month, maybe in the next 2 weeks, which is the rest of the month, just to acclimate myself to it. And but I mean, long term, I think it will pay off. I'm on a 30-day free trial right now, and we'll see how it goes in terms of what I do at the end of the trial. I do think I'm going to end up buying at least the lowest package for futures spread trading, but I don't know if I'm going to I don't know that I'm going to go with the highest value um, the premium package. So let's just take a look at some of the positions that I'm carrying over. No, first let's talk about where I won and where I lost, the realized P&L as as of today. I did actually take profit on the nat gas over here. Nope, that is crude oil. I did take profit on the nat gas exactly where I said it was gonna. It actually gapped up over the weekend, and I had an opportunity to take it higher, but I didn't. I just let it stop me out and I kept my original target for the 400, and it didn't hit. I was just like, you know what? I was just being greedy, and so I let my stop be what I said my target was going to be at the end of Friday, which was 2.36, and I ended up getting stopped out somewhere along. Oh no, right here yesterday, right here as it dropped. So not a big deal. It was a nice little $300 win. Not too crazy, not too shabby, but not great either. I took an opening range shot today, stopped me out, no good. And what I should have taken was crude oil, and I didn't, because here's the thing. Here's the crude oil. Crude oil is such a slippery bastard. Like I can't. I'm determined to figure out how to play it, but today was not one of those days. So you can see that I got shaken out on Friday. That was not good. Today, the opening range was right here. It was actually one more tick above. Okay, so there's the opening range. Let me go now to a 30-minute chart, and what you're gonna see is that like the overall trend is a little bit sideways, and the overnight low was right there. So I was like, you know what? I want to take it short. I didn't even think about taking it long, right? I don't know why, right? I guess I got really. I mean, it faked me out so hard here. Made me lose $250 in like 10 minutes here on Friday, that it made me really, really like cautious and only look at the breakout one direction. And I was like, you know what? It is not a good idea to take this down, because there's too much like support, like here and then down here. Like there's not much risk reward, right? And like an idiot, I didn't even look at the upside. Stupid. I don't know. Crude oil is definitely having its way with me, and it's just kind of like teasing me right now. But it's also, what can you expect when it's like this choppy? Look at these 4-hour candles, just super super choppy. And I don't want to force anything, but at the same time, I'm also finding like there is something here. Like there is major opportunity here, but I just need to be able. I just have not been able to get a good read on it yet. The Dow, I think I also took a shot, and I think I may have gotten stopped out. Yeah, I think I took a shot at the. I think I took a shot here at the 2875, 27,825. I mean, and I wanted to push it back up here, but it just totally stopped me out. What are you gonna do? What are you gonna do? I thought that and after that, there's plenty of room to say that, okay, take this down. It's a little bit more. Looks like it's starting a little bit of a downtrend now, especially if you look at it on the hourly. It's a little bit more obvious. You can see that it wants to. It wants to go down. A lot of buying pressure, a lot of uncertainty. To be honest with you, these candles, they're going lower and lower, but they're very like middle-bodied. I don't know. I forgot what the name of it is, but very uncertain candles, like not knowing what to do. And this is on the hourly. right? If you look on the 4-hour, kind of the same thing. Like there's not much movement. The candles are getting smaller, and the bodies are staying in the middle. It just does not know what to do. Very, very, very range bound right now. So those were some of my losses. My one win was taking one contract off the British pound. I took the 3,075 here. I took it long. I am a little bit scared but you're seeing a little bit of a consolidation right now with this, and do the same thing again. Saying looking at the trend line like this, right? And when you see this kind of consolidation, it's asking for a break one way or the other. So I am obviously hoping it breaks long. Fundamentally, I'm long the pound. I think they're doing better than we are over here, and I am more bearish on the dollar. What did I just cancel here? Yeah, I don't know why the notification is coming up late, but I got rid of my orders here a long time ago, right? Okay, so I don't know what that's about. Okay, let's get this out of the way here. I don't want this on my watch list anymore. I can't take it anyway. My other positions are in the S&P, and the S&P was also very choppy, but it started climbing just a tiny little bit to give me a little bit of profit. Nothing too spectacular here. Very, very muted kind of a move. I wanted to get in on this, quarter down here, this 33.50. That would have been beautiful. That's really where I just totally forgot to set that order. And I was like, oh man, I really, coulda, woulda, shoulda. There's the tweezer formation. It's just a lot of reasons for that to have hit and worked. And there's definitely room for at least one. Well, I mean, for this, from 350 to 375 is your one quarter. And what I ended up doing is taking it somewhere in the middle, and I'm looking to take it above these swing highs, right? It's having a little bit of trouble. You can see a lot of uncertainty candles here, and I want to see all-time highs again in the S&P, not just for my own trading, but just for the economy in general. I think that's what's really going to give people a lot of confidence in the market, even more so than it already has. I understand it can be it's artificial and fake right now. It's like you injected adrenaline or steroids into a dying person's body. That's literally what the central banks and Trump and the Fed did to the U.S. economy. That's why we're seeing the numbers that we're seeing, and it is technically fake and inflated, but I'm okay with it. Keep it going. If you're gonna tell a lie, then tell it all the way. You know what I mean? I am. Hopefully, I want to see this go up even more, and hopefully it doesn't crash correct back too much. Although it's not surprising if it does. Hopefully it doesn't, because we have coronavirus more in control by the time that happens. So we're really facing a race right now, fundamentally speaking. My other position is in the gold. I'm in it short this time. This is a level that I saw the zone here, the drop base drop. At an even 2,000 mark. I did a little bit of front running, although the 2,000 would have worked. I did a little bit of running to go into a 1997. And I'm looking to take it straight down. This is obviously taking it from a I am this is not catching a falling knife. This is the opposite. What is it if you're trying to smack down a rising spike? That's kind of what this is, because look how strong the RSI is. It was way above 70, it was almost at 80. But at the same time, you could argue, if I go shorter here, you could argue divergence. You could argue divergence here. Here's a high.
Well, maybe not. Maybe like I don't know. You might need to like split it up a little. But like this is a high before this candle, and then you can see and then this is another high. This is a higher high, and you can see that the momentum is dropped off, and the momentum is dropping off rather quick. So long term, I do think gold is going to go up, but I think it's going to retrace first, and then the institutions are going to come pick it up back at like, you know, probably even down near like the 1900s, or maybe you might wait for it to break and hit it all the way down at 1875, 1850. I don't know. We'll see. I'm looking for a couple $100 move down to, you know, just like the 1960 something area, the first area of a little bit of resistance. The resistance prior that became the support. That's really what I'm saying is, like, I think this is going to act, the previous resistance like around here is going to act as support. So I want to take some profit there. I wish I had multiple contracts on it, but I was a little bit scared. I was taking a trend reversal, so that's never really like a big confidence booster to take things counter trend. So taking the counter trend, I guess I really only wanted the risk of one contract. If it gets down somewhere pretty close to or halfway down to my take profit, I'll insure some profits or insure at least a break-even trade. Those three positions are what I'm holding overnight, and I think I also took a loss on the Australian dollar, which yeah. So I got in at the 200, and it started. It looked really bullish, so I just cut my losses before it hit my stop, and I'm glad that I did, so that I minimize my loss. I only lost like I think like 20 something dollars on that, so it's not that bad at all. So that's really it for today's video. Not much action today, but definitely a lot of mental shift and a lot more biting off, not more than I can chew, but definitely biting off more to chew with the upgraded platform that I have in TradingView. And it's a trial, and I have 30 days for free to really master it and understand it and decide what paid plan I want to buy. 600 at its highest, and it's about like 120 at its lowest per year. Not bad either way, but I need to know what's the best fit for me, and that's going to be part of the trading vlog here on YouTube and Facebook going forward. So let's see. At its highest, and it's about like 120 at its lowest per year. Like that. Not bad either way, but I need to know what's the best fit for me, and that's going to be part of the trading questions or comments here on YouTube and Facebook. At its highest, and it's about like 120 questions per year. Not bad either way, but I need to know here on not bad either way, but here on YouTube and Facebook, going forward. Here on YouTube per year. Not bad either way, but I need to know here on